Good evening, all of you. Shall we start or shall we wait for 5 minutes more? Am I audible to all of you?
Yes, sir.
Yes, sir.
Yes,
Shall we start or we shall wait just for 5 minutes more?
right, sir.
20,
As
25.
your
Okay,
wish,
let's
sir.
start. No, we actually we are running time behind, right? So let's start. Let others join gradually. There is no issue. But let's start with it. Yesterday, in the last class, I mean yesterday, someone has given some query regarding detailed discussion about the unit 2 of block 1, and yesterday also, after getting the notes, I have gone through the notes. Actually, we have generally fundamental discussion made about the economic growth and development. It is written there, economic growth and development. In the first class, I think we are having discussion regarding economic growth and economic development. What is economic growth and what is economic development? We have already discussed, but still, let's have further discussion regarding all these things. As a human being, we are having two things, growth and development also. Tell me, physically we are growing or developing? There
Growing.
is
Growing, sir.
there is physical growth. There is physical growth and mental development. Acha, bro, both these growth and development are completely different from each other or somehow related to each other.
Somehow related.
Definitely, exactly. They cannot be completely distinct from one to another. Now, when coming to the economic growth, economic means already we have to. I have told you we have made a lot of discussions regarding economic activities. When everything is related to money, all the activities related to money, all these are called as the economic activities. Now, in case of a country, how we are telling that some countries are advanced countries, some countries are developed countries, some countries are developing countries, some countries are underdeveloped countries. What is the basis? What is the criteria for determining all these things? Let's discuss all in detail. Prior to the bookish discussion, let's have some discussion, formal discussion. As a human being, suppose you are here, I am also here. Suppose we shall compare. Suppose you are going to compare your neighbor, that whether he is economically more stable than you or he is as of you. How shall we start the comparison? Can you please tell? How between two individuals we can compare about the economic development or economic growth of these two people? How can we compare?
Like we can compare their lifestyle, their assets.
Very good. This is one criteria that looking into their assets, we can tell that he is owing this much of assets, so he is more financially sound. This is one. Second, any other way?
Way of living, sir.
Way of living. Same thing, just he has told that the standard of living, way of living, assets he is owing, all these things. Just
The
imagine
job, what they are
job,
doing.
job. What they are doing, that is important, or how much they are earning, that is important.
How much they are earning?
Exactly.
Okay.
What they are doing, that is not much more important. Most important is that how much they are earning on the basis of their income levels. It is too easy to just distinguish between the individuals who is more economically advanced, economically better, or who is less economically disadvantaged in comparison to the other person. So one way is to club the income. Another way is to club the expenditure, how much he is spending, what is his life cycle. By this process, we can compare these two individuals. In case of a country, in case of a nation, that economy, Indian economy, American economy, Chinese economy, how we shall make the comparison so that we can conclude which country is economically advanced, which country is economically growing fast. All these things we can know later on. So what are the different ways? First one is your purchasing power parity. Purchasing power parity means it is simply the purchasing power of the currency. What is that purchasing power of currency? Suppose in India, we are going to purchase, what shall we purchase? A pair of one television we are going to purchase. Let the television, or we are going to purchase a laptop with i7 configuration, 11th Windows 11 OS, and all other some configurations. We are going to purchase a laptop in India. How much it will cost? Let it is 70,000. Now we shall go to America. That same laptop with same configuration, same manufacturing company. Now what shall be the price? Will it be $70,000 or it will be less than that one?
It will be less than, sir.
Very good. Less than means $1 and ₹1. Now both became unequal, because that 70,000 rupees is not equal with that $70,000. $70,000 is definitely much more valuable than 70,000 rupees. So this is the purchasing power of this currency. This is the purchasing power of dollar. This is the purchasing power of rupee. On that basis, we can compare that which currency is more stable, which currency is more powerful, which currency is having much more purchasing power. On this basis, we can tell that which are the advanced countries and which are the other countries. So this is one way of measurement of the economic growth or economic development. This is one. Second part, there is another way of measurement of economic development. For economic growth, we are comparing the purchasing power, and for this economic development, now we shall compare. Already, I think we have discussed what is economic growth, what is development. When there is increase in per capita income, there is economic growth. But whereas more number of employment, more worker participation, more productivity, all these things lead to economic development. When there is economic growth, definitely correspondingly there shall be economic development in the country also. Without this one, that one cannot be achieved. And if that is achieved, definitely these things, there are some structural changes in the factors of production also, or the, so to say, the different areas, there are also changes in the economy. Now, when we are going to measure the economic development of a country, there is a way that to compare Human Development Index, HDI. What is Human Development Index? Now, on this basis, we shall compare the physical quality of life index of the people, the Human Development Index. In this one, we shall compare various factors like life expectancy of the people, schooling, expected years of schooling, standard of living. Taking all these things into consideration, we prepare one HDI, Human Development Index. So HDI simply signifies the quality of the people. That quality of the people is determined by their life expectancy. Life expectancy means expected years of survival of a human being. So life expectancy, expected years of schooling, standard of living style, all these things taking into consideration, HDI is prepared. And as per your data available in your study material, in the year 2020, India stood in 131 rank out of the 189 countries. There are 1, 2, 3, 4, 5 other countries. You may go through it. But India is there in 131. Gradually it is going up, no doubt. Now, when the Human Development Index is prepared, or so to say, when we calculate the purchasing power parity of the money, there is another way of classification of income on the basis of the income level. We can tell which countries are having higher income, so to say, developed countries, developing countries, and underdeveloped countries. As per the classification of income level, what is income level of a country? That is gross national income per capita. Gross national income per capita. Now, on that basis, there are different countries which are categorized as high income group of countries, where their per capita income is $12,536 or more. On that basis, the countries are USA, UK, Germany, New Zealand, etc. Then, next to high income, there is upper middle income. Upper middle income is there is a range in between $4,046 to $12,535. On that basis, the countries are there: China, Thailand, Maldives, etc., etc. And next to that one, that is lower middle income group, that is $1,036 to $4,045. India is there, Sri Lanka is there, other countries are also there. So you just can imagine now that what is the per capita income of India in comparison to China and in comparison to USA. That's why they are called as USA is much more powerful. Why it is powerful? Because economic concentration is there. Huge amount of capital is there. Per capita income is there in comparison to other, right? So this is another way. Next way, another way of finding out the economic growth of a country is that Harrod-Domar model. What is that one? Now, they are telling that economic growth we can compare between two countries by the role of savings and investment. By the role of savings and investment. There is a ratio called as savings is to income rate. Another ratio there is capital with output ratio. Now, what are these two ratios? We are getting income. Out of our income, how much amount we are saving? That depends upon a lot of factors. What are the factors? Availability of banks, cost of living index, standard of living of the people, like that one. This is the saving income rate. Another one is the capital output ratio. Capital output ratio means for production of one unit of a product or a goods or commodity, how much of capital is required? That is capital output ratio. Take the example. Suppose 10 lakh rupees invested in India for the purpose of production of anything like that one, your LED bulbs. 1 lakh rupees is invested for production of LED bulbs. Same 1 lakh rupees is invested in America. The production shall definitely be different. In America, the productivity will be more. That means how many number of people are engaged in India, how much there shall be their output. The same number of people employed in America, their output shall definitely be more than India. That is called as the capital output ratio. So it is called as the economic growth can be measured on the basis of the saving income rate as well as the capital output rate. Okay. So there is always constant, or so to say, there is always change in the savings in income rate as well as capital output ratio. As so gradually when the people, their economic conditions are rising, savings income rate definitely will improve. Further, when the country from underdeveloped, it will go to the phase of developing country. the economic growth rate will be more. How it will be more? The capital output ratio at that time definitely will be more in comparison to the previous time periods. So this is one another way of comparison of economic growth between different nations. That means savings and investment, income and savings, capital and the output. Okay. Now suppose the savings rate, that is savings with income, is 10%. Savings is to income is 10%. Capital with output is 2. Ratio is 2. So the economy will grow at a rate of 5% per annum. On this basis, the economic growth of different countries can be calculated. Okay. Then, in that one, economic growth, there are different terms used. One is warranted growth rate, another one is natural growth rate. Warranted growth rate means the growth rate where the economy is running at its full capacity. That means there is best utilization, optimum utilization, maximum utilization of resources to the full capacity. That is called as the warranted growth rate. Generally, it is happened when the country runs in the phase developing to developed countries. In that phase, this full capacity system, or so to say full capacity condition, will prevail there. Then another one is there, natural growth rate. Natural growth rate is that on the basis of capital, technical knowledge, natural resources quality, all everything. This one determines the growth rate, maximum limit beyond which there cannot be growth rate. That means taking into consideration the tools and equipment. Any query? Anyone is putting a question, I think? Okay. What is natural growth rate there? Now, taking into consideration the technical knowledge, natural resources, all everything, it is determined that the maximum growth or the upper limit is given like this. Beyond this one, it cannot go. That is natural growth rate, it is called as. Further, there is another model, solo model of economic growth. Keep in mind, this is the most complicated one. Solo model of economic growth is the most difficult one to get it easily understood. So, please, if you are going to make a note on this model, browse internet, or so to say search in Google, prepare your notes accordingly. I am just highlighting what are the key areas of this solo model of economic growth. Robert Solow, who was there, he got Nobel Prize also, and he has developed this solo model. What is his model? According to his model, there are changes in population growth rate, there is changes in technological process, and changes in savings. All these things bring changes in the level of output. Telling once more, taking into consideration the changes in population growth rate. It is very simple to understand. As the population will rise, the availability of manpower for the purpose of production naturally shall be easier one. A country will not face labor problems. So, changes in population growth, rate of technological progress, a country which is technologically advancing naturally will be in a better position in the field of its productivity. And rate of savings. Rate of savings is the most important factor because it contributes to the capital formation of the country, availability of capital to the country. All these things make changes in the level of output. So, the growth rate in the long run, it is determined by the growth rate of labor force, labor productivity, per capita income, and the rate of savings and investment. Okay. So, on that basis, this model is developed. There is a graph also for that one. On that graph basis, capital per worker, capital output per worker, and the amount of capital. Here one small thing I will tell you. Suppose in a country there are 1 million workers available. 1 million. Suppose for this 1 million people, the country has employed 1,000 million rupees or 1,000 million dollars for the purpose of business and investment. Now, initially, when these 1 million people are going to work, initially, at a time, government will not spend $1 million for the purpose of investment. Suppose government has utilized $5 million, then further $5-10 million, then further $10-20 million. In suppose 5-10 phases, the total capital is being utilized. It is natural to see that when the first phase will be applied, the productivity will be more. When the second phase will be applied, productivity will be more, but the rate of productivity growth will be less in comparison to the first one. And in the third phase of utilization of capital, the growth will be more, but the rate of growth shall be less in comparison to the first and second. That is called as the diminishing returns. Applicability of diminishing returns. So that is called as the productivity, output per worker, and capital employed per worker. It's natural. Take our example. When suppose you are reading a book, when you sit to read a book, you will put your full attention for the first 5-10 pages. For the next 10 pages, your attention will be somehow less, but the number of pages is 20. So the number of pages reading is growing. In the third phase, when you will read 30 pages, number of pages will be further more, but the attention you are paying naturally shall be less. That is diminishing returns. Okay. So this is the another model of calculation of the economic growth of a country. Now, please, from your side, any further discussion regarding this economic growth and developments? Then I shall come to theories of economic development. Major theories of underdevelopment. What is underdevelopment? When a country is not fully developed, when a country, the growth rate is not achievable as it should have, it is underdeveloped country. What are the various reasons? What are the various theories for that one? First one, the vicious circle of poverty theory. Poverty is a vicious circle. Poverty runs in a vicious circle. How it is so? Suppose you will ask a poor man, why are you poor? He will simply tell, I am poor because I am poor. I cannot help it. I am poor because I am poor. Now, imagine the life cycle of a poor individual. How much of money he is earning? He is spending almost more than 50% of his money for his food, rest for clothing, rest for shelter, and he is left with nothing for savings or for any other luxury item. Now, suppose the children education, the time came for children education. He took a loan for the purpose of children education. What happened here now? The loan amount, the burden increased, whereas income did not increase. So what will happen? He will be now in the trap of loan. The first loan cannot pay the interest, he cannot repay the principal also. What he will do? Then he will try to find out another loan to repay the first loan. In this process, he will be in the trap of loan system. He cannot come out of it. That is called as the vicious circle of poverty theory. A country is like this one. All the total national income of a country, if the country is a poor country, underdeveloped country, the government or the nation first will try to provide food facility for the people, then at least some health services, then developmental expenditure, infrastructural developmental expenditure shall be zero. There is no money left for all these purposes. So what will happen? The country cannot grow. National income is being spent for food, clothing, hospitality of the people, like that one. There is no money left for the industry, no money left for the electricity projects, no money left for the transportation facility developments. And how the country can grow? The country cannot grow. Now the country borrowed some money. There is a repayment of interest for the loan. There is less of income generation from the country, but the burden of loan increased. The government will be bound, forced, either to increase the tax. Now the people cannot pay the tax because the country is a poor country. Government will think other alternative. What are the other alternatives? To beg another time, to take another loan. So the first loan is defaulted. To repay the interest and principal of first loan, second loan is taken. Now there are two loans. The burden is more. It cannot also be repaid. There shall be third loan. In this process, the country will run. That is called as the trap of loan system. So this is one of the feature of one underdeveloped nation. There is vicious circle of poverty. The country cannot come out of it. Okay. Then second one is there, low level of equilibrium trap model. What is equilibrium trap model? People are having low income. Low income leads to less savings. Less savings lead to less capital formation. Less capital formation leads to less investment rate, less availability of capital. As a result, there shall be less production. So this circle continues. That is called as the equilibrium trap. They cannot come out of it unless and otherwise the income of the individuals increase. There cannot be growth of savings rate. And unless savings, there is significant changes in the savings rate, there cannot be good amount of capital availability, capital formation in the country. Without capital, there cannot be an industry. Without industry, there cannot be production. Without production, there cannot be any employment. Without employment, there shall be people with poverty. This circle continues. This is called as the low level equilibrium trap model. Another one is there, critical minimum effort theory. What is critical minimum effort theory? Every country, every economy, there are two forces: income depressing force and income generating force. What is income depressing force? Now, when the country is a poor, country is itself poor, there shall be fall in the per capita income. The people are poor, they are not getting adequate employment. If they are employed, they are not getting proper rewards or remuneration, or so to say, they are reward for the employment. Naturally, their per capita income shall be less. Another factor is there, the countries might be having income generating forces. What is income generating forces? Now, multiple choices are there for the purpose of production, employment, anything else like that one. If these facilities available, income generating forces are available, the country will grow. You imagine at your age, who are now at the age of 40 or like so, that one, you imagine your childhood days. Ask your parents, simple to tell you, ask your parents when they were young, or so to say, they were graduates, were they getting so much of avenues of income generation as you are getting now? They will definitely tell no. They will tell they were having less number of choices available with them. There was less scope for employment. There was less scope for industrialization. Nowadays, multiple choices are there. Multiple options are available. This is one example of income generating force. And the opposite is your income depressing force. Okay. Another one, theory of big push. What is theory of big push? A country is running in a poor condition. Now, out of this poor condition, if the country need to rise, definitely there is the need of a push. Without that one, it cannot happen. Here the example is given, an aeroplane. an aeroplane, in order to take off, it needs some ground speed. After that one, it takes its own speed. Exactly for the economy also. In order to change the cycle, in order to change the location from one position to another position, from one underdeveloping to developing position of the economy, there is need of push in the economy. What is that one? Government may bring reforms. Government may frame different plans and policies. Somebody might have remembered during the tenure of Janakulya Patnaik, there was a slogan, 1000 industries in 1000 days. 1000 दिन में 1000 industry. J.B. Patnaik at that time has told like this. Nowadays, our government, Odisha government, is telling industrialization with single window clearance. These are the push-ups. If these things are given, the economy can grow, right? It will lead to production. That production will lead to employment. Employment will lead to income generation, consumption, as well as demand for goods and commodities, as well as savings. And savings will lead to capital formation. Capital formation will lead to availability of capital in the market, and availability of capital will lead to entrepreneurship activities. If money is easily available, many people shall be interested to do a business naturally. Okay. Another one is there, Rosto's stages of economic growth. What is that one? Now, a country when it is trying to change its economic condition, there are different stages of economic growth which must have been passed in order to be called as a developed country. What are the different positions? Traditional society, precondition to take off, drive to maturity, and age of high mass consumption. In the traditional society, the production function was not so scientific. It was as of its old style. Now, this phase has to be changed. The traditional society concept has to be changed with some scientific perspective. The next one is the precondition to take off. In the preconditional to take off, different ideas are there, different ways of living are there, different ways of betterment is available, different ways of more and more available in the market. That is precondition to take off. After the precondition to take off, then there came the takeoff stage. In the takeoff stage, there are dynamic changes in the society, and the standard of living of the people increased. Taking all these four into consideration, the fifth one is there, maturity, age of high mass consumption. Now, imagine the case of India also. As our population is growing fast, so also demand for various goods and commodities. There is mass demand. In the world, India is one of the most attractive countries for different foreign direct investment proposals to start business in India. Why not? The country is having fastest growth in demand for various goods and commodities, right? So these are the stages of economic growth. 5 stages are there: traditional society, precondition to take off stage, and the maturity stage. Okay. So I think this part is over. Any doubt or any further clarification do you need? Please tell me. Any further discussions?
No, sir.
Sir,
No, please tell.
sir, actually we are not able to understand half of the things.
Which one?
Getting, sir, most of the things. Sir, have you shared any notes in the WhatsApp group?
No.
Sir, I have one question to ask.
Yes.
Sir, till now the Brajabandhu sir haven't included in that WhatsApp group. After telling 1,000 times, he is not adding us. I also called him several times, but he is not picking up the phone, not even adding me in that group also. So I'm not able to attend, receive any kind of notes or anything else. And this
Okay.
economic part is, sir, it's very much difficult. Seems like it's very much difficult, the entire syllabus, sir.
Actually,
Sir,
first
if
thing.
you can help me in this regard, it will be very good for me.
Definitely. First thing is that you please WhatsApp me your name, your roll number, and your session of. I will tell the official of the
Uh,
study
sir,
center.
Sir,
I
actually,
don't have
he's
your
saying,
number also. Sir, can I
Ji?
have your number?
Anyone else is telling something?
yes, sir, actually, the problem is like you are teaching well, but then we don't have the hard copy also. So that's why
Yes, sir, your teaching method is very good and it's excellent actually, but the thing is the topic is overall very difficult.
like
So
after
it's very
you
hard
finish,
to understand actually.
sir, actually, after you finish teaching, if we can go through the hard copy, then it will be easy for us to remember, but we don't have anything.
Actually, the subject, this paper is quite a vast, extensive one,
Yes, sir.
which generally it will cover a lot of things in different modules, different parts. It's quite a difficult job task to cover everything in the 4 classes also. But regarding the notes, I think I do not have any note of with me available, because I do not follow any notes as of available with me, or I do not prepare also. But I just refer your study material, and somehow Google search is there. I manage with it. But what actually support you need from me? Please tell.
Sir, you can give us the main points, sir. You can give us the headlines which we need to go through for the exam.
Sir, or else like previous year questions or any important questions, because it's impossible to cover all the things.
Yes, sir. It's quite impossible to actually cover all the
Sir,
syllabus.
one unit is there, international financial system. Like even I cannot understand anything from that.
Sir, in the first day you told us to go through the first chapter, but when we went through the chapter, it's almost 119 pages are there. So it's
It's
like an impossible kind thing to get through all.
what to do actually. Tell me. Your class
Yes,
arrangement
sir.
is like this. For in 4 classes, we have to cover all everything, and as far as practicable, we are trying to. I mean to say reach each and every model, but it will be impossible to cover everything in this classroom. It is only for the doubt clearing, or so to say discussion purposes. It will be fine.
Yes, sir. It's impossible, but sir, you can share with us the headlines or which we need to go through properly for the exam purpose.
Okay. For that one, I think you people are having a WhatsApp group, I think.
Sir, may I have your number?
Sure, madam. 94371 double
Yes.
3
Huh?
593.
593.
Ji.
Thank you, sir.
Most welcome. You WhatsApp me your name, all
Sure,
everything. I
sir.
will talk with official. I will get it, the workout dates.
Sir.
It's not a big issue, but I don't know why it is happening with you. But I will see. Further regarding the subject,
Sir,
what
many
can I
students are
do?
complaining regarding this. They are also not added in that group. I hope
I see.
so.
Yes,
Okay,
sir.
I
I
shall have a
also
talk
not
with
added.
them. Okay, I
Okay,
shall
sir.
have a talk with them. Acha, any further for this topic? This one
No,
over.
sir.
Acha, we shall cover another one: business ethic, corporate social responsibility. I think yesterday there was a question from your side regarding. There was assignment writing about CSR, corporate social responsibility. This is from this unit. You may write down
Sir,
from this unit itself. Okay.
who student is not prepared for the exam January 20? No
Yes.
problem. This student is exam June 22, 22. Okay.
Fine.
Understand
Sir,
Now,
some
how
idea about
that?
that international finance system, sir. So many things are there in that block 4.
block 4.
Yes, sir.
Let me see that one.
Gently, sir, could you please repeat what you said?
Which one, madam?
जो जो जनवरी 20 में जो एग्जाम होने जा रहा है, जो भी प्रिपेयर नहीं है वो जून में एग्जाम दे सकता है, मैं ये बोल रहा हूँ।
पर हमने फॉर्म फिलअप किया
That
है
is not a choice, na. We need to attend in this year or this semester, because in the
Yes.
next semester we already have another 7 papers.
Yes.
So how can we postpone it?
No, it
No, we know the whole process.
it possible. It will be the
We know
regulation
it's
and
possible.
Actually, sir, we know the process, but the thing is, we have already prayed for second semester, but we have not received the hard copy till now. So how we are
it is
going to?
it is term and regulation of IGNOU.
Sir, please
Is
you
a
continue,
Acha.
because time is getting over.
Right. International financial system, I think you were telling to discuss about that one, right? International financial
sir.
management, is it that
Yes.
one?
Yes, sir.
Okay. I think yesterday we are having discussion regarding that one. That is 1991 period when Dr. Manmohan Singh was the finance minister, and the balance of payment crisis was there in India, and the foreign exchequer reserve, forex reserve it is called as, it was the low, high time low at that time. So government was under a threat to go for foreign trade, and it was impossible on the part of the government to manage with the reserve of foreign currencies available with India. Now, the next alternative was available for India was to ask for some financial help from the International Monetary Fund. Now, what happened? International Monetary Fund, after a review of the Indian financial system, put a condition. We may give some financial help to overcome this difficulty, but with a condition that your economy has to be reformed. Your economic policy has to be changed. Then government of India is having no other option, so it agreed with that one. So from that period, the changes in the Indian economy started. There was LPG scheme, that is liberalization, privatization, and globalization was also there. Further, for the purpose of trade between different countries, disputes are there. It will be there also. In order to solve the disputes, there was an international body that is called as the World Trade Organization. You know very well regarding this one. In this WTO, agreements are there where different countries, they agree with each other to have a good trade policy which is beneficial for all the countries which are mutually associated in trade among themselves, right? Actually, USA and other countries, they are advanced because the liberalization policy they have adopted earlier, and we have adopted it over a late period also. Then the business size that was changed, multinational corporations, they spread over many countries. These multinational companies, nowadays you can imagine the huge volume of production, huge amount of capital investment in the multinational companies, multinational corporations. They are quite big enough, which we cannot generally tell that what kind of bigger they can become. Grow day by day, they are growing like anything. Nowadays, you might have heard the term Amazon. It's growing in the retail sector. Coca-Cola and that Pepsi company, all these are the multinational companies. They are operating over different nations. This multinational concept came after the LPG scheme, liberalization, privatization, and the globalization also. In this internationalization process, what are the different steps involved? First thing is that the economy has to be globalized. There is no doubt regarding that one. The economy has to be globalized. Further, the process of imports and exports has to be simplified. Further, the tax policy on the imports and exports has to be reduced drastically, which is acceptable by international fixed rate of imports and export duty. Earlier, you can't imagine for a general product, the export duty or the import duty, it was being levied like 200% or 300% of the cost of the product. Nowadays, it has been reduced like anything, which is internationally acceptable figure 1. So, due to these changes, multinationals, they kept their interest in the prospective markets like India, China, different countries also are there. They tried to do more innovation in the field of research and developmental activities, and they set up production facilities abroad, marketing abroad, distribution abroad. That means making business in different countries. They are trying to make production at such a country where the industrial base is better. They try to do marketing activities in that country where the possibility of growth of sales is more there. They try to put the research and development wing in that country where the country is technologically advanced itself, right? So these concepts bring huge changes in the financial management system of a country. The international financial management, the main purpose is to maximize the wealth of the shareholders. What is that wealth of the shareholders? Shareholders are the true owners of the business, and in order to maximize the capital also to the wealth of the shareholders, there is called as the international financial management. Imagine in the earlier time, suppose there was a company operating in India. It was producing in India, selling the products in India. It's okay. The boundary is restricted. No outsider can come. So whatever they are producing, the product is sold in the Indian market. They are facing competition with the Indian competitors only. This is one kind of financial management they are making. But now, when the market is open, when the other foreign investors are coming to India, the company will now see the challenge. It has to go for international markets. It has to search better alternatives for the purpose of production, for the purpose of marketing, for the purpose of distribution, for the purpose of technological changes, for the purpose of research and development. So for these things, the management is needed. That is called as the international financial management to tackle the employees, to hire the good managers. Nowadays, imagine earlier we were hiring a manager from India. Now they are thinking internationally, who can handle multiple countries, who can handle different regions, like that one. So this concept is called as the international financial management. In case of a finance manager of MNC or multinational company, he will face different changes, different challenges internationally. Those challenges will be many. Challenge of asset allocation, challenge of risk management, challenge of profit sharing, challenge of different tax laws, challenge of different money markets, challenge of different interest rates. Lot of things are there. The finance manager has to keep in mind before taking any kind of financial decision for the MNC. So the role of the finance manager is critical here. They have to equip with all the latest available resources, knowledges for the purpose of handling finance for these multinational companies, right? So this is called as the international financial management. Any doubt regarding this meaning and objectives? Any doubts from your side? All are remaining silent.
No, sir. No, sir.
No, sir.
Either it is not at all audible or you are not listening. Okay. So that is called as the international financial management. In that international financial management, we shall come to your second unit, that is international economics. Big changes are there in your syllabus nowadays. I am seeing first time this one also. No issue. Now, lot of globalized events are seen nowadays. Lot of events are there. The price of crude oil, war between different countries, the gold rate, the exchange rate, the availability of different secondary markets, cryptocurrency. Now the recent thing is there, NFT. All these things are the big changes in the whole economic system of a country. In this international financial condition, there is need of a system which will aim for promoting economic growth along with economic stability. The main purpose, the main target of international financial architecture will be to ensure global monetary and financial stability. Right? That is called as the international financial architecture. Okay. So in that one, there are big changes actually. Changes in the dollar pricing, changes in the euro, role of International Monetary Fund, that is World Bank. Lot of things are there. All these things, supply of gold, war between the countries also determine the currency value, also to say the different other factors also. Role of OPEC countries, oil and petroleum producing countries, like that one. So these things, the IMF, the rising of GDP, the exchange rate mechanism, lot of things are there which determine the whole economic structure at international level. There is debt crisis. You might have seen there was a crisis in American market 1-2 years back. There was a crisis in Indian market also during the COVID crisis. There is a debt crisis also. There was a housing boom in America. All these examples. There were oil shocks in the year 1979-80. Like that, recession period in 80-82. The rate of interest, currency valuation, taxation policy, all these things, all total contribute about the economic, I mean to say financial architecture at international level of a country. Now India itself is not able to control its everything. Its own currency value, India cannot control on its own. It has to be changed internationally, depending upon the purchasing power parity, or all many other factors are also there behind that one. Stableness of the government, growth of the different other sectors in the economy, standard of living of the people, growth of per capita income, mass demand for different products and commodities by the people. All these things contribute growth of economic growth, that is called as. And these things change the perspective before the rest of the world. Now in the world also, India is counted one of the best destinations for investment. Next to China, in the Asian countries, next to China, India is the best destination. Why it is so? Gradually, the ease of doing business is better. The SDI is improving, the GDP is improving, the per capita income is increasing, the country is growing fast, there is technological advancement. Many multinational companies, they have kept open their business in India also. These things give rise to the changes in the economic scenario at international level. Debt crisis. You imagine the rate of interest. It was just 5 years back, I think the rate of interest was 10, 11%, 12%, like that. Now it is 5%. Day by day it is declining. It is determined with many factors. Not only India, everywhere it is like so. It is internationally linked. So in India, we cannot rate the rate of interest to 10%. Many factors are there, right? So different crises are there. One is debt crisis, East Asian crisis. Many
Sir,
these things are there. Please tell.
sir, in the last or before 3 years back, the rate of
Hmm.
interest is 10. Now it is 5. That means we are telling that we are developing. That means we have to invest the money in the market.
Which market, madam?
No, sir. Actually, I am telling that if you are telling that we are on the developed condition. So the rate of interest is decreasing.
Yes.
Then how we are developing?
Exactly. Listen carefully. There is a circle. There is a cycle. Just imagine one part now. From your first point, rate of interest is decreasing. If the rate of interest will decrease, the rate of availability of credit, or so to say, the interest rate on loans and advances will be more or less.
More, sir.
How it is more? If the deposit rate is 5%, if the deposit rate is 5%,
Sorry,
let
sir.
the
It will
loan,
be less.
it will be also prospectively less.
Yes.
Imagine if the rate of interest is 5% for deposits, rate of loan is 7%. If
Yes.
the rate of interest for deposit is 10%, rate of loan will be 12% naturally. So decreasing in the rate of interest naturally will be cheaper for availability of credit for the business people. Now the industrialists, they will get the money at a lower rate of interest. They will be more interested to take loan of more amount of capital for the purpose of investment and business. They will try to do their best because they know capital is available easily. They know capital is available at a lower price. So now production increased. If there will be more production, the more number of people are getting employment. If more number of people are getting employment, naturally they shall get more income. If they will get more income, they will naturally have demand for many consumer goods. There shall be huge demand for different consumer goods. Then demand for the consumer goods shall lead to further demand for production of the goods and commodities. Now the country will be in this circle, it will grow and grow. You imagine the cases of sale of televisions, sale of mobile phones, sale of cars, all these everything. There is mass demand for these goods and commodities. As a result of which the economy is now making production, making consumption, making savings, making investment. This circle is going on. Is it clear to you, madam?
Yes, sir.
Fine. Now,
Thank you.
thank you, most welcome. There is another one, international monetary system. Big things are there. There is one term that is the International Monetary Fund, IMF. Read about that one, its role, its policies. What is the role of International Monetary Fund? Exchange rate arrangement. Dollar is exchanged in place of money. Money is exchanged in place of dollar. How it is being exchanged? Just to get that one. Commodity space standard. There is another one, gold, silver coins, all these things. They are being full value as per their face value. But there are other metal items which are having different other kinds of value different than their face value. Then how the rate is determined there? Gold. Gold is also having an international price. Gold is not fixed. Regionally in Orissa, price is there. In Delhi, the price is different. It is little bit different. Based upon the transportation, other factors, it is little bit different. But the price is same all over India. At international level, there is market. The gold rate is fixed or changed on daily basis, right? So these are at the international level, these things are happening, and I think you people will get a little bit difficult. It will be difficult to understand and write a note about all these things. But you give me some time, I think I will provide note on this chapter later on. Okay.
Okay.
Because
Okay, sir. Okay, sir.
Please, sir.
I will provide this note about this.
Sir, when we will get the hard copy of study material?
Madam, that knowledge I do not have actually. The study center people, they can tell you exactly when the study materials will be available for you.
Timetable, etc. They will give us.
Everything, madam, actually they will provide you.
Okay.
Okay.
Okay, sir.
So
Okay, sir.
for this paper, I will provide you complete notes, which will be better for you to understand and everything. Just give me 3 to 4 days time. I'll let me prepare it and I will give it to you. Okay. Any further
Okay, sir.
discussion from any other unit? Do you need?
Sir, will you send in WhatsApp group by?
Actually, I am not in any group. I am only in this classroom group only. I will share with you one of your friends, anyone who can WhatsApp me. I will share you later on. Today is Monday. You please remind me on Thursday, Saturday better. I will provide you the notes. It will be available to everyone.
Okay, sir.
Okay. Please tell any further discussion from any other unit. Do you need or you can manage with it? Another thing, if you still have any doubts, I think the time is too less to cover everything. If you still have any doubts, already I have given you my number. You please have a call to me, but better will be to call during the evening time only. So any doubts, you please call in the evening time. I will clarify all your doubts during this evening time without any hesitation. Okay. So please have a call and go through all your queries at that time.
Okay, sir. Thank you.
Thank you all.
Okay, sir.
In the coming Saturday, I will give you the note of this unit 3. Don't bother for that one. And thank you all.
Thank you so much, sir.
Thank you,
Thank you,
sir.
sir.